Today, we got the secret tax. So we're going to be discussing the secret tax called inflation. All right, so what is inflation? So inflation is pretty much a rate of increase in the amount of prices over a certain period of time. And I'm sure you've experienced inflation at some point. You can think of perhaps a Coca-Cola. Even if you haven't drank soda, you go back 20 years ago, I'm sure a can of Coke probably cost, let's say, 50 cents. To now it's like $1.25, and it's going to keep going up. Another example you could think of with inflation, you can think of rent. For some reason, rent always seems to be going up and up and up, and you have no idea why. It's definitely a lot more expensive now than it was 5 years ago, 10 years ago, 20 years ago, 30 years ago. All right, rent just keeps going up and up, even though you're just paying for the same amount of space, but rent continues to go up. Why is that? Well, that's partly because of inflation. Now, yeah, there can be demand and whatnot in specific areas, but usually it's going to be because of inflation, because there's an increase in price over 20 years, 30 years for rent. And so you can also, this also affects your savings and other goods that you're trying to pretty much purchase. But you can also, to even simplify it even more, imagine $1 that you had 10 years ago. It's not going to buy you the same amount that you could have bought 10 years ago than it is going to buy you now. So again, with the Coca-Cola example, if you had 50 cents, that'd be enough to get you a can of Coke 10, 20 years ago. But today, with 50 cents, it's not going to be enough to buy you a can of Coke. You need $1.25, not even like $1.50 is pushing. Same with rent. If rent was $100 10 years ago, today it might be $200-$300. And that's because there's an increase in supply of the amount of money that's printed, right? So this inflation causes other prices to go up while the value of your actual dollar goes down. And that's why you require more money to pay for, the same amount of goods than you would have required 10, 20 years ago further back down the line. And this can affect your savings, right? So if you have $1,000, $2,000, just a couple $1,000s or whatever, it might not be that big a deal. But once you have, let's say, 100,000, 200,000, I don't know, a large amount starting to save up, and you just have it there saved. Now, granted, that's really good, right? If you have a large amount of money saved up, because you have some capital. That's good in itself. That is good. But over the long term, if you have all that capital just sitting there, that can actually hurt the amount of money you do have because of this secret tax called inflation. This inflation, which on average lowers the buying power of your money, or the amount of things you can buy with your money, by about 3%. So if you have $100,000, 3% per year. So if you have $100,000 today in your savings, and you go to next year, your actual money saved, even though it's still $100,000, right? When you go a year later, you haven't touched it. It buys 3% less than what you could have the year before. So you've technically lost $3,000 on that money that you originally had in your savings, right? So, and that's on average. Even with this past year with the pandemic, unfortunate that it happened, but with all these, stimulus and whatnot, that actually the number was well over 20% of the rate of inflation. So that's going to cause prices and all these other goods that we would normally pay for to go up about 20%. And we're going to see that occur throughout in the future. It's going to continue to increase and increase. So therefore, rent's going to increase, food costs are going to increase, right? So it's important to take into consideration this secret tax that people don't like to talk about called inflation. It causes your current money to go down in value while all the other goods continue to go up, because pretty much your money just stays the same. But because the government continues to print more and more, the value actually goes down because there's a larger supply of that money in the market, right? As other costs go up, your money also goes down. So inflation can be really bad on any money that you do have saved up. And again, of course, you have to also try and be aware of your own situation. If you're a college student, or you don't have that much money saved up, but it's more if you're like your nest egg, then yeah, I'm not saying go ahead and you have to be worried about your nest egg being going down due to inflation. But if you have a larger amount of money, that is going to affect you a lot more, especially if you just have it saved and you don't have it invested or making you any sort of money at all. So it can eat up against on your savings if you have a larger amount. So again, if you have just your 3 to 6 months nest eggs for the thing, and you're pretty solid there, then maybe you don't have to worry about it so much. But taking a look, what can you do to go ahead and try and circumvent this inflation? Well, you can go ahead and try and invest your money somehow where it just makes some sort of a return for you. That way, it's not losing value over the long haul. Now, okay, I'm not saying you should directly go and invest. You have to, again, be aware of your own situation. You can also take a look at high yield savings accounts. You could always look at that. I know a couple of them tend to be anywhere from 2 to 3%, which usually beats out the yearly average of 3% of inflation per year. Now, for years like this past 2020, where inflation was over 20%, yeah, the high yield savings account might not be the best, but it's better than just leaving it as like in your savings account where you're not touching it, where you're making 0.01%, right? So you can look at a high yield savings account, and it does the same thing as if you were to keep it in your normal savings account at some other big institutional bank, right, or your credit union. So those are two different ways you can go ahead and try and circumvent this sort of inflation, which is just like this tax that's eating away at your saved money or your money that's also not invested. And if you do invest, you could always look at ETFs, you could check out stocks and do your own research, of course, and check out what is best for you. But you can try to look into investing it so that money is there making you more money, or you have at least like a sort of high yield savings account, and you can use that account to go ahead and at least make a little bit of money and sort of even out this amount of inflation that on average you would be facing per year, again about 3%. But with the savings, be aware that if you have a large amount of money saved up, it is going to eventually be eaten at over time because of this, again, secret tax called inflation. All your cost of goods are going to go up while the supply of the dollars go down. So I just wanted to go ahead and share that with you guys today, discussing inflation, how it's actually eating away and costing you money, the money that you have in your savings account, and a couple different ways you can try to think of and look up and do some research on to try and circumvent the situation. I hope you guys enjoyed today's discussion on Money Talk Monday. I'm wishing you guys all the very best, wishing you a truly great day. Thanks for watching.